like that is my skill set. Like that's what I did.
Yeah.
You know, while the industry was different, like the skill set of sales and marketing was what I learned and was good at. And when I saw wholesale, I'm like, that's my in. So I'm like, I'm going to start wholesaling.
Welcome to the In the Arena podcast. My name is Jared Miguez, a co-host on this podcast that brings you the inspiring stories of our clients who are leaders and innovators across different industries in Southeast Louisiana. They are visionary entrepreneurs, savvy real estate professionals, media creators, military business owners, and community champions. And we are going to showcase the remarkable achievements and share their personal stories. Tune in for insightful conversations, valuable lessons, and motivational stories that are going to reveal their secrets to success and offer you insights to help you on your own path. Welcome to In the Arena podcast.
Welcome to the podcast. Today we have Steve, Aussie Steve, as everybody knows him. This is the In the Arena podcast, and we talked a little bit about this, and we focus on several pillars. The cool part about this episode is that you're going to be able to touch on two of the main pillars, business and real estate. And so I'm just really excited. So we'll dive right in. A lot of people know you here as a real estate investor, but let's talk a little bit about your backstory, what you did before you came to the United States. You and your family are from Australia, right?
Yep.
And you founded a business and that grew and sold, right? So tell us about that.
Yeah, so I mean, my background is definitely like entrepreneurialism. I straight out of university, started my own business. I sort of brainwashed myself with saw Robert Kiyosaki speak in 2000, and that just impacted me about you want to be on the business, investor side of the quadrant, as he describes it. So I started my own business. Firstly, it was by myself. It was Effective Marketing Solutions. It was a marketing consultancy working with small businesses. So I'd done a lot of studying marketing and economics at university, but there was a disconnect between I was learning all this marketing, but I didn't apply to small businesses. But with this entrepreneurial mindset, I'm like, how does it apply to Coca-Cola? I can do the 4 Ps and run a marketing plan, but how do I help a small business? So it got me reading a lot outside of my university studies. I learned a lot about direct response marketing, sales. I learned marketing from a sense of marketing is salesmanship in print, and that's
nice.
So then when I graduated, I'm like, well, I'm gonna help people, and so I would do marketing consulting for all sorts of businesses like hairdressers, landscapers, painters, just all diverse range. I would cold call them out of the yellow pages. I would go and meet them and give them a marketing strategy, and I'd sell them a plan, etc. So that was my first business, and it sort of ended up merging into. I had a partner. I met someone who was doing a similar thing, and we banded together, and we wanted to target a particular industry. So. My uncle was sick, and he got a lot of benefit from natural therapies. So exposed me to naturopaths, nutritionists, all that sort of stuff. And so I sort of liked that industry, and it was a trend. This natural alternative health was growing, but it was a real cottage industry. The therapists were passionate.
Yeah.
They love what they do, but they had no idea how to run a business.
How long ago was this?
This would have been 2000, and I graduated 2002, so 2003, 2004,
Gotcha.
Into 2005. So that trend was happening, and so we started helping. So we did the same thing, the marketing, tactical marketing plans, but we did it for natural therapists.
And when you're talking about marketing, I think that it's important clarification there, being that you've run a business that help people do this. Marketing and sales and branding are 3 totally different things. Right?
Correct.
And so somebody who may be good at one-on-one sales is not necessarily going to be great at marketing. So can you give a little bit of perspective on that?
Well, so and it depends where you're at. So because branding is a top level marketing, which is very effective, but it can be hard to start. If you're starting a new business and it's you need to have a concept of the brand you're trying to build, but if you're doing just branding advertisements, you're probably not going to get an ROI, and it can be hard unless you've got tons of money. It can be hard to do that. So then sales is, you're going to learn to sell someone, turn a prospect, get them to buy. And then the marketing that I focused on was in between branding. And it was for me, it was salesmanship in print or online, that was the trend. Online was newish then too. So we would really AIDA, attention, interest, desire, action. If you want to sell anything, so I think sales and marketing are pretty similar. again, not branding. I'm taking it down
Yeah.
to a lower level,
Yeah.
but you know, you want to get AIDA is the model: attention, interest, desire, action. First thing, people to have their attention, just know you exist. Like that's step one. Interest is then them going, oh, tell me more. Like what do you do? What do you offer? And then desire is I want that product, I want that service, I want that thing. But that a lot of people get desire, but they don't get action. Like action is a sale, and that's really where the salesmanship normally comes in.
Gotcha.
So for me, we were trying to do that salesmanship in print. You know, for therapists at the time, it was like ads in local papers, the brochures they use, how they sold their services. Online was starting to be a thing. So we really had to do well online, and were able to create websites, do SEO, and the websites were able to do like sales pages. So we were creating content and like getting traffic to sites, and that led us to the next business, which was we found there was we were consulting with these people all the time, and we ended up like doing very similar tactics. So we actually created a manual, a book and a manual. That actually colleges were training their therapists on this book, which is pretty cool.
Nice.
The Complete Guide to Business Success in the Alternative Health Industry was. I like long names.
You got to say that slower again.
I like long names. I get in trouble
it.
for that. But it was the Complete Guide to Business Success in the Alternative Health Industry. And it was just like real tactical stuff again, therapists was a cottage industry, and they could pick it up and like they would start creating pages, and that'd make money. You know, they'd make sales, and we taught them how to upsell and like get programs for their customers to come back. And so that led us to, we found this site. It was Natural Therapy Pages, and it had like 400 therapists on it. And I contacted them to sell our book. And the person who ran that, David Vitek, like he called me. I sent an inquiry. He called me like 10 minutes later, and we sort of just negotiated how to to work together to set like we had complementary services, because he was building a portal, a web directory for therapists, and you know he was doing a good job of that. He was getting traffic, but the therapist had a page that would say what they did, and it was mostly not good. So we started like helping the therapists write pages, and like they were converting. So like the therapists loved us because, you know, they were getting work, but it was a combination of the site and the copy. So we sort of worked together for a while, and when I met them, he had there was a separate business, but they were sort of working together. He was writing a business plan for home improvement pages, which was a similar thing for contractors. I might say the word tradies. We call them tradies in Australia, but tradie, contractor, same thing. And we've done a little bit of work with contractors because, you know, I've been doing through my effective marketing solution. So we just serendipitously met, and we worked together as individual companies for a while, just joint ventured on things, and then we ended up merging in 2006, and we became one company. And we had the natural therapy site, and we had the home improvement site.
Cool.
And
So two totally different industries. Wow. Okay.
two different industries. But the thing that was together was it was really like an SEO play. It was there was technology behind it. It was sort of new. There wasn't a lot of like sites out there that were doing this. So
the early 2000s on website development was so much fun. Social media. Like the algorithms weren't there. So you spent any bit of time on it while everybody else was sleeping, and you were going to see success.
Exactly. It absolutely started to work. And we were selling these like contractors to get listed, and they're like, Google, what's that? That was literally the conversations we were having. Or they're like, the internet, that's a fad. These were the conversations we were having. But
it was right after we didn't blow up in the year 2000.
Yeah, exactly,
When we thought that was going to happen, right? And it actually stayed.
Exactly.
I was 13 whenever we didn't blow up.
So what was interesting there was that so we put our companies together because like my background was sales and marketing. I had a partner with me who was also like sales and big sales partnerships. In the company there was David, who was tech. He's like Mark Zuckerberg smart tech. He did all the coding on the sites. Robbie was an accountant by trade, and he started the home improvement side. So he's had all the numbers, the models, etc. So they were missing that sales and marketing. So when we came together, it was like a powerful mix.
So, but before you move on to that, you talked about you had joint venture agreements, and before you all became partners. I think a lot of people who are thinking about starting businesses or want to acquire businesses or want to be involved in business, don't know when the appropriate time maybe to partner on something as a joint venture or to actually sign on the dotted line and have an operating agreement in place where you're a partner with an LLC. How did y'all make that decision?
Well, we just did individual projects to start with. Like, we had an arrangement where we provided like our book, a chapter of our book to their therapist, and we sold our books on the back of it. So we started with a simple thing like that that was easy for us to operate. Then we would do expos together. So we would have an agreement where we would get shared stands. We would do certain things. So we sort of just started by like on a project by project basis.
Yeah.
Then when we ended up merging, you'd probably geek out on that. We did a heads of agreement, so we sort of came in and we negotiated bringing the businesses, because we had sort of separate, we had alternative health business solutions. They had the natural therapy and the home improvement, which is starting. And so we sort of negotiated value where we're at, and we did that in a day. We sort of negotiated back and forth. We left and we sort of came back and we just hashed it out in a day. And then we went to like a heads of agreement for how that was going to work. And then we did the shareholder agreement. Yeah. That's a big deal.
Yeah.
That's a big deal. Lots of things to negotiate through and bad scenarios, which I know you guys would be teaching people. It's like, what if you got hit by a bus?
Think worst case scenario.
Or
death, disability, divorce, the 3 Ds.
So we went through all that. So that was hard, and there's a lot of protections and interest. So that took us a while to like hash out and finalize. And then like over time we'd like had investors come in. So like whenever there would be some investment, like often there might be a board member added, and so that shareholder agreement has to change. So, and that can be heated, and there can be points, and again a shareholder agreement. Like hopefully you have these really bad conversations, you figure out the worst case scenarios, then hopefully you put it in the shelf.
You never worry about it,
and you never pull it out again.
Well, you do it while you're happy. And it sounds like you had good attorneys that were working on your behalf, because the problem is we see all too often right now, we're in this do-it-yourself, world that we live in. They want to print something and sign it, never look at it, never consider those hard things. And so when something negative happens, it's like, oh shit, none of us know what's about to occur.
Yeah.
If you do it right in the beginning, you know exactly what's going to play out, and you can continue to make calm, good, informed business decisions. And then summarizing what you laid out to answer Jared's question, I mean, you said it perfectly. You basically did the JV agreements to date, right? You do these projects, these solo projects together to know if you do work well with someone, right? Because, I mean, people make that mistake, or they make the mistake that I want to hold on to everything myself. Well, the most successful people in the world are resourceful and find the right partners.
Absolutely.
And so when you do, try those little small projects, date them to see how it works and how well you work together. If you do have that synergy, if you do can test your values, right? Test your value system against one another, then you can jump into the hard stuff. And
then I think when you to follow an analogy, when you get married, you need a prenup. You need a
That's right.
I'm not necessarily outside in the real world, but that's a shareholder agreement. You need that.
Exactly.
You need all of those things ironed out. Particularly if you're trying to build something of value. You're going to put a lot of time, money, effort. You need that shareholder agreement. It can't be a handshake.
No.
We obviously, fast forward, we ended up IPOing on the Strange Stock Exchange. So it's like,
so awesome.
like there's a lot of value. Like you need to have, you need to have the
handshake won't do it.
Handshake won't do it. There's a lot of money on the table. Like,
and you're answering to the board because you're operating the company. It becomes much different.
Absolutely. Yeah.
So let me ask you that. So when did y'all have the vision and plan of going public at a certain point, or did that opportunity present itself? Because, there can be some planning for that. A lot of things we talk about with our clients, it's like if you want to grow and scale your business, something that is saleable or a legacy business you can pass on to your children, you have to plan for that. Yep. And so how much of that planning did y'all do before the opportunity came up? We planned a lot. It was always an option. IPO wasn't the only option. Like, for us, it was like there could be a trade sale, so we were very conscious of building value into the business so that it could, be a trade sale. It could be IPO'd at some point. We want to like get equity for ourselves. And we ended up like, it's like, well, let's go towards a trade sale, but then like have an IPO as a backup. So you want to have the options, and you never know. It's tough because I must admit, like we thought it'd be easier, than it was, and like we put a lot into the business, and at times we're speaking to people that wanted to invest or acquire,
and like, you know, we got what we considered pretty insulting offers, and and to be fair, I mean, it's probably justified. Like we had an inflated opinion.
Sure. Your baby, you started that thing from scratch.
So I must admit, we thought, and we have partners, so it's like there's also like people, we can have some different objectives. That people at different stages of life, you know, we have had families at different times, so there was a decision to make at points where it's like, do we maximize profit now, like make distributions now, or are we maximizing the value of an entity? Because like to grow a valuable entity, which we're trying to do, we're trying to create a two-sided marketplace in Australia, and it's a two-sided marketplace. Is sort of a winner take all. Like you need to win that market, or you die. So it's like, you know, are we trying to eke out some profits now, make some money in our pocket, or are we going all in? Because if we go all in, that's a decision that like you're not making lots of distributions. That money's going back into the business. The company's been going for 20 years. We hit profitability this year, first year.
Wow.
So like, that's pretty crazy, right? And you know, we IPO'd on the stock exchange at a value of $315 million. And you know, so we'd maximize the enterprise because we'd made money, but we're investing back in because you've got to put it back into growth. So, you know, that's a decision that we could have made another decision, and it was discussed. Like we could have not gone that path, given more profits out to us in the shorter term, but that business wouldn't have grown into what it was today. So these are decisions you need to make the whole way through. Yeah,
and you got to date those partners to know they're on the same page.
Yep.
And we've had similar conversations. I mean, we're still 2 years in our company, but you know, we made it very clear between all of us that we had, and luckily we're all in similar phases of life, but we made a decision that we were going to fill out certain buckets, and once we filled the buckets up, we were going to reinvest back into the company and try to grow it. And so we're having those types of conversations, and it's hard every time because you know with the four of us getting together in a room like gung ho about it, things happen in life, and then you know these people have families and they have other priorities and things like that, and so you know recalibrating that regularly is important too.
And then, I mean, so we've had investment along the way, and then like investors come, and that's a new entity, you know, because at first there was 5 partners, we're all directors, we're growing a business, but then you get investment, and these people, they're non-executive directors, so they put money in. So we might have been paying ourselves a small salary because it's going into we had some staff that paid more than us, just because there's some key people we had to keep, and it's like we're growing a business that they were getting more money than us. But then once you start to get investment in, it's like, well, hey, now I've got people that are owners that aren't working. Like as owners that are working, like we need to now up our compensation because I'm also I'm an employee. I'm an employee and a shareholder, you know, and someone else might just be a shareholder. You know, and I left the company in 2018, and I was still a shareholder, but I'm no longer an employee. You know, so it's you wear both hats.
So before we transition into the real estate side of stuff you're doing now, your current activities you're doing, you brought up a point. There's 5 partners, right?
Yeah.
And so we have 4 partners at our firm, and sometimes you'll hear the bad advice, in my opinion, of just be careful about who you partner with, or that's not bad advice, but the advice that people will say is you don't want to bring partners, or make sure that you keep 51%, or you know, just like people from an outsider perspective, not knowing the dynamic of the relationships between the partners and what the business takes. So how did 5 people, which is a decent number because it's an odd number, but how did 5 people with just a lot of opinions come to make decisions to grow businesses, and how did y'all operate?
Well, we were all directors, so we had votes, you know, and you know, majority, you needed a majority.
Good odd number.
Good odd number, you know, and in our then we had shareholders too. We added some directors, and then there was like super majorities. Some decisions needed super majorities, and some didn't. So there was always we disagreed a lot. By the way, the disagreements I think were part of the magic. You know, so you know, I've since sort of read Traction, that visionaries and operators, and what I realized I had 2. I'm a bit of both in that, but. We had a lot of disagreement. So one of my partners, this visionary, smart, like he's a genius, right? but like he's also the genius. So he'll always change his mind. He's always got a new idea. So it's like you've got an idea today, and it's like, but then tomorrow it's that's totally opposite. And you know, and I had another partner who was just a phenomenal operator. Like he just makes things happen. You know, plan, let's go. Like, you know, so they're diametrically opposed, and they would argue a lot. And what I found interesting was like I actually got both of them. Because I had a bit. I'm more of a visionary than an operator, but I'm pretty strong in operation as well. So, like, they totally disagreed, and I'm like, you're both right.
Yeah.
Like, so it's like, so we had a lot of disagreement, but the disagreement was good.
Yeah.
And we worked through it. You know, but we had arguments.
Yeah.
That's the best conversations. If it ain't getting heated, you don't care.
Exactly.
I think a lot of it takes a lot of humility for people who are operating a business with several owners. So you have to be humble and be self-aware of the strengths and weaknesses of yourself and your partners, and be able to lean into all those things and be okay with your operator pushing back on the visionary, and the visionary creating opportunity for the company, and the operator understanding that they are casting a wide vision, and you got to pick and choose the priorities at the moment, but everything's a good idea, just maybe not right now.
Yeah. And we got good at that too. So everything's a good idea, not right now. So we got really good at backlogging things. So being also tech, so we had a lot of tech people around us. So we would capture ideas and we would put them into a backlog. So because the problem is everything's a good idea, just not now. But the problem is but I got this idea, you keep ignoring me. So we would do sessions, we'd capture all those ideas. So we'd put them together, would rank them, and we're like, these are all great. These are the ones that are like low effort, high impact. We're doing them now.
Yeah.
You know, and you get new ideas, cool. Let's add that to the backlog. And we would constantly address this. So that's a really good way to capture ideas from not just the partners, but from the staff. You know, like there's a lot of good ideas in the staff. So we were good at that and just having that backlog, and we'd pull it out, and some things never got done.
Yeah.
But and some good things never got done. And that's a good thing, you know, like because good's the enemy of great, right?
Yeah.
We do a similar thing. We have an opportunities list that's running, and we leave it on our issues list. And if we ever have extra time to discuss, we can pull out the opportunities and decide, you know, what we want to tackle at that point. And I love the fact that you brought up that the ideas are not coming from a single source too. There's this limited mindset in people understanding business that a visionary has to be the one that's leading the direction of the company or coming up with the ideas that are being implemented. And that's just not the case.
Yeah.
That sometimes is a person that has a very high risk tolerance, that is willing to help push people. But like that alone, an idea generator alone cannot be your only job, you know, your only contribution to the company. Because like you said, you have employees that are coming up, they're in the grind, seeing what things can really make your business even more valuable. So being open-minded enough to pull those ideas from everybody that's stepping foot in the company is important.
And that was really important. I mean, that the ideas are in the company, and you know, we would create growth teams around. So we were pretty good at empowering people in the company and creating cross-functional teams. So we would figure out like what our key objectives are. We would change out. I know you guys into objectives, so we would do OKRs, objective and key results. Although we change things, so we can be manic sometimes, but we'd create our objectives and key results. We normally have 3 for a quarter, and then we'll create a team around each one. And that team was cross-functional. It had like some sales, it had some service, it had a tech, it had developers. When we got better, we had data scientists, which was awesome. I love those guys. But they would own the metric. So we're not telling them what to do. Like, this is the metric. They would have the ideas, and then they would have a daily stand-up. They prioritize ideas, they start actioning them, and then watching the metric. Is the metric moving? You know, and they're literally like, I don't care what you do.
Correct.
I care about the metric.
Yeah.
Like, move it. And giving them that ability was empowering.
Yeah. It's I think the dynamic between the visionary and operator, or just anybody who has ideas, or somebody who it tends to have ideas, it's good to hear them out because it keeps the fuel and the passion going.
Yeah.
But then making sure that it's going to go towards the priorities that you've set for that year, and not chasing squirrels, because there's always going to be an opportunity.
And then making sure you're getting the results that come in. So something we learned was, most of your ideas suck. Right? And this is humble pie, but like you, I think that's the biggest mistake business people make. You fall in love with your idea, and you're like this is it.
Emotional attachment.
And then you throw so much stuff at it but it might be wrong. So I learned this from the guys at Atlassian, which is an Australian company. They're listed on the NASDAQ. They're actually a really big company, but they're in Sydney, Australia, where we're from. So their product manager talked about this, and he said, 9 out of 10 of your ideas suck. Deal with it. And they're your best ideas. Your 10 best ideas, 9 of them suck. So how you got to attack it is you got to test the idea with an MVP, a minimal viable product. So because in the tech world, you had this idea, and it's like, cool.
Let's start working on it.
Let's build it out, and you have these flow charts, and it's like, cool. Well, in 6 months we'll have a prototype, and then and it's like, no. How can we test that idea like next week? Like, don't build me that all those bells and whistles you just drew up. I don't want them. What can we do next week to make sure that thing works? It might be a landing page that doesn't work. It might go nowhere. It might have no back end. It might go. Everything's starting in a spreadsheet for us. It goes to a spreadsheet. But
collect the data.
And sometimes there's no data. Sometimes you do that thing, there's no data. It's like, oh, that was a bad idea.
Correct.
All right, let's try it next. So we saved 6 months of building this beautiful, eloquent design that was for no one. So that concept was really important for us to just cycle through ideas. And then when that thing hits, it's like, oh, okay,
That's a good one.
Now start building that. Like, let's the next thing and layer in and so by focusing on that metric though, you're making sure the action you're doing is growing what's important.
Yeah, the way I heard somebody say it once is that you have a bunch of good ideas. You might have like 5 good ideas, and then you go and you build out what is it going to take to accomplish all those ideas. 4 of them are going to have a list that's going to be impossible and so time consuming that you don't even have time to accomplish a good idea. One of them is going to have something that can be accomplished in a reasonable amount of time.
Yep.
That's the idea. That's the one that you pursue. The other ones you put on the opportunities list, maybe later.
Because that's probably low effort, high impact. Like,
Exactly.
we like the grading of like what do we think the impact of this idea is, and what do we think the effort is.
Yeah.
And anything that, if it's low effort, high impact, you are doing that now. If it's high effort, high impact, it's a project. It's like maybe, but can we do a test? Can we do an MVP to just make sure it is as high impact as we think? If it's low impact, if it's high effort, low impact, you are never doing that. Cross.
Never. You need a buzzer for that one.
Low impact, low effort. It's like a rainy day. Maybe we'll do it.
Yeah. So let's transition to what you're doing now. So I know you moved your family here. How long ago?
2018. So we had an IPO yet. We got an investment. News Corp invested in us. They bought 30% of the company. I was able to sell some shares into a secondary. So I raised some decent funds. Still had a bunch of shares, and I'm like, I felt it was time for me to move on. We had like 300 staff. I was that direct response marketer, right? Our Google, our Facebook, like all that stuff was great. Our sales was great, but like we needed the brand, the TV, and to be honest, like I'm okay brand, but I'm not like driving brand to the level that we're at now. So I felt like it was time for me to go. So I want to take a year off. The idea was just take a year off, don't do anything, like a little mini retirement. Yeah. Just clear your brain. Don't think about your next move. So part of that was coming here to New Orleans. We'd been to 28 states in America. We love America. New Orleans, our favorite city. I was a Saints fan already, so I'm going to come. So my daughter went to a school in Sydney that has a sister school in New Orleans. Cool. So we organized to do a semester exchange. It was just an exchange. We're like, put her in for a semester. We're going to come. We're going to eat lots of good food. We're going to go to all the Saints games, enjoy ourselves. And that was the idea.
What school was that?
Sacred Heart.
Okay.
Yeah.
So you left the summertime in Australia, and you came over here for the wintertime here. You left wintertime there to come wintertime here. You came here in the fall, right? The football season.
Yeah. Exactly. And we didn't intend to stay here. My wife we're from the same area, in Bondi in Sydney. For 2 generations. We're both like 2 generations Bondi. We grew up there. Like both of us never saw ourselves leaving there. So, we did not intend to move here, but we came here, and like 2 months in, my wife's like, we're not leaving, right? We just fell in love with the food, the culture, just the city, just relaxed. Life's easier here. It's a bit of arbitrage. Sydney's also the second least affordable city in the world for real estate. So, where we lived, the median house price is like $4.3 million. Wow. So it's like, as median too, it's like okay, house. Yeah. So there's a bit of arbitrage. So my wife, we fell in love, and she's like, we should move here. I'm like, yeah, cool. I could do that. Like, let me think about what we could do, how that could look. So there was an arbitrage of a house here, beneficial. I wanted to do more property. I had some rentals. I had like 6 rentals in Australia. I believed in assets, but I wasn't a property person. I was a tech, and I ran sales and marketing. So my skills are sales and marketing. That was my department in the company. So
It translates to real estate.
it absolutely does. And so we looked at the market here. The market was good. I'm like, you know what? I'll let's do it. So I figured out I could come here if we started a business. We can get an E2 visa, which is a business investment visa. So I started Home Buyer Louisiana, which is focused on acquiring distressed properties. I bought my first property from a wholesaler, and I didn't know what a wholesaler was. And I'm like, okay, wholesalers have the deals. Let me learn what they do. So I went to a course on wholesaling, and my intention was to be a customer. I'm like, I want to be a good customer to wholesalers. And then it was it's sales and marketing. I'm like, oh my god,
right.
So she's going through I'm like when she was
Wait,
explaining,
I need to do this.
pulling lists and marketing and talking to sellers. I'm like that is my skill set. That's what I did.
Yeah.
While the industry was different, the skill set of sales and marketing was what I learned and was good at. And when I saw wholesale, I'm like, that's my in. So I'm like, I'm going to start wholesaling. So I went, all right, I'm going to be a wholesaler. I started putting my blinkers on and learn everything wholesaling. Just didn't think about anything, because real estate is really big and shiny, and that's what's good about it. But you can get lost in that. So I went wholesaling, going to start there, and just started wholesaling. So finding distressed properties, I was assigning those to other buyers. I had a whole bunch of buyers in my network, and that taught me real estate because those buyers were smart. These are all the cash buyers that are buying deals, and they taught me how to think about property because I didn't know New Orleans, I didn't know Louisiana. So I learned the market through finding these deals, seeing what they liked, seeing what they didn't like, finding more of the deals they liked. I also learned that every investor was different. So they all had different ideas on properties, and none of them were right or wrong, but it's just different approaches. So just learning why this person loved that deal and this person didn't, and what they did with it and what they did with it, just taught me a lot. So after a little bit, I became more confident in the assets themselves. So I started buying myself. I really got into the Burr investing. So buying cash, doing a rehab, putting a tenant in and renting it out, and then doing a refinance. So because I was buying distressed, I was able to buy at a good price. Once I fixed it and put a tenant in place, normally about a 6-month seasoning, I would then do a cash out refi. That'd lend me 75% of the value of the property. And mostly that was less than the money I had into it, because I bought well and fixed it. So I'd get my money back. Be like, okay, cool. I'll do that again, buy the next one.
And someone's paid your note for you on the back end.
Someone's paying the note. It's an infinite return, really, because I've got no money in the deal anymore, and I'm getting a return from the tenant. They're paying down that note. It's not a massive return, but I've got no money in it. And they're now amortizing that loan, paying it down.
All right, so before we get to, I have a ton of questions. All right, so the first question, we work with a lot of real estate investors, people who think they want to get into the real estate business. And so my advice to them usually is to pick one of 2 aspects of the business. Go learn how to be a wholesaler, because you can learn how to find deals, structure deals, and then you don't have to have any money in the game. Sell to somebody who's a buyer, and you can, like you're saying, you learn from those people who are buying properties and seeing how they're doing it. The second way is to come in from a property management standpoint, because a lot of people don't like that part of it, but you can see a lot of how people exit properties and how they acquire them, how they manage it, the issues that kind of run into whenever you own properties. And so those 2 angles give you an insight that you can learn while making money in one aspect of the business. How do you feel about that advice?
I think that's great advice. I haven't heard that but property management is key as well. I mean, I use property managers, so I don't have those same skills, but if you have them, you're valuable. I did notice something about different between America and Australia. In Australia, pretty much every investor has a property manager. It's easy. And they're a commodity. They're easy to find. Every real estate agency has a property management arm, and they're good. They're cheap. It's about 6%. So it was just norm.
Yeah.
When I came here, most investors don't use a property manager. They're cheap on it, and I'm like, it's just different, and therefore they're harder. The property managers are harder to find, because it's not a commodity.
Yeah.
There's some bad ones. So I think investors should use property manager.
Amen.
And I think a property manager is a great. I mean, that a wholesaler, you controlling a deal, you're learning how to find deals. That's a great skill. Being able to manage the property is the other side. So I think that's really good advice.
That side that I don't want to do.
Exactly.
So you hire property managers for manage your properties?
Absolutely. And so I think here's another thing, advice I'll give to people that are trying to build a rental portfolio, because I think most investors have it backwards. They're like, I don't want to, they're sort of like, they want to save money and not have a property manager. And they're like, I'll get a property manager when I get a certain amount of doors. And it's like, that's the opposite. Like, it's a percentage. You're paying a percent. So it's like your first door, that percent is the best price you'll pay. Because once you get to a certain level, it actually does make sense to do it yourself, because you can bring, instead of paying the percent over all those properties, you can hire someone. So it's the reverse.
Yeah.
And I think that's every small business owner or investor's issue, right? Is when to take that step. If they don't have that expansive vision of growth, then they're never going to get there.
Yeah. I'm lazy and incompetent, so I like to outsource things. I like to find people that are more competent than me. And I mean, I think that's also an entrepreneur's mistake. Like, we were never we always hired people better than us. We had some awesome talent in our company. They're all better than us at different things. Like, we weren't. I think some entrepreneurs are like, I'm the boss. I got to show you what. Like, you got to, like, this is the way to do it. I'm like, we hired people that told us. I'm like, wow, okay, you can run meetings like that. You can, like, let's do that.
Do it, right.
So I think the same with like property management. Like, it just if I can outsource it, if I can find people that are good, like, that makes sense, and you will make more money because it frees up my time. Yes, I'm paying that fee, but like, my time, I would not have the properties I have now if I was having to manage them, And I think people think they waste money on property management because you're paying this percentage every month. And yeah, a lot of months it's for nothing. Like, it's for collecting a check. There's probably direct deposited. But I've had people die in my properties. I've had people drive a car into my property. I've had these issues that have happened, and my property manager told me, like, hey, Steve, just want you to know this happened. By the way, someone died in the property. It's okay. We were there. The coroner came. They're there. We've got a cleanup crew. So, like, I know it happened, but like, they were sitting. They sat for hours for the coroner and a police person like, they did that. That was worth the percentage. You know what I mean? And not having that nightmare story, not being called out, like, allows me to keep going. And again, it depends what your skill is. If your skill is managing property, you could build that skill and maybe make that your in. But for me, the sales and marketing is my skill. Yeah. So I'm like, I'm just finding the next deal. Like, next deal, cool. Manage it, cool. Let's refinance it. Next deal.
So good. Piggybacking on that, I think this is a good transition. You have property managers, and you're looking to bring in new deals. And you said that on the burst strategy, and you mentioned downstairs before we started that you like single family, and usually the return every month on a single family is not going to be a gigantic bite. I think a lot of real estate investors look at this real estate investing world and people who are successful at it, and they think that, you can go buy a couple properties and now you're going to be a millionaire, real estate investor. But that's not the case. So what is your mentality around scaling that business, and what is your idea of a good transaction and from a return standpoint, and what is your long-term vision for your properties?
So to me, the rental properties are long-term wealth. So a lot of people want to live off their rentals. I think that takes time. Like, I think that's an unrealistic expectation. Unless you're generating cash, like in another business or another way, and you're parking that cash like in real estate, you can get a return on that. But your cash is held up there. But if you're not doing that, if you're using debt and finance and trying to scale, you're not going to really make money to live off today. Like, you can put a deal together where you got no money in it, and it's an asset that's going to grow long term, and the tenants are paying down your debt, but it's really a long term thing. So my rentals are long term. It's about wealth. I think it's a really sure way to build wealth, but you got to sit in it for a little while. I also think of my rentals. For me, it's about. I really think I'm shorting the American dollar. Like, I'm betting on inflation, right? Because I don't necessarily think that the value of the property is not going to appreciate. I actually think it's going to inflate, because I know in 10 years' time, inflation's going to go up. So the value is going to be up. The rent's going to be up. And if you have 30-year fixed debt, the debt stays the same. And that's actually the power, because if your property doubles in 10 years and the price of food doubles, the price of gas doubles, the price of everything else doubles, your money hasn't doubled. you preserved your wealth. But when you have debt on it and everything's doubled and that debt stayed the same and actually been going down because it's getting paid off, that's really where you're building that long-term wealth. So for me, the rentals are long-term wealth. I do my wholesaling to make money now. I have my business and people have jobs, and I don't think you should quit. You shouldn't quit your job and just get into real estate rentals and think you're gonna keep your job, build some rentals, and maybe in 5 years, in 6 years, maybe you can, but it's gonna take some time. So I have a long-term thought. I do prefer singles to doubles. I prefer singles to multis. Sorry, I do have some multis. I mean, I got a 6-plex, a 3-plex, and a few duplexes, but I do like singles. It's just a personal preference, really. I mean, multi's fine as well, but it's just as an asset, I think there's more exits. If you've got a nice single-family home, like you can always sell to an investor who's going to buy as a rental, like you did, but you can also sell to a homeowner. So if you've got this big like multi-family, right? If the market's bad, like now, there might not be a good market at a price that you would find acceptable. Yeah. Whereas a single family, you can sell to an investor, can sell to a homeowner. So I tend to like single families. I do lean towards lower valued ones, like around a median price, because when the properties are worth a lot, the rent doesn't tend to go up in the same percentage. The yield's lower, so it's harder to cash flow. So I like just simple, 200K ARV type properties, 3-2s, but like, and my philosophy is if I can get all my money back and the tenant's going to pay the note and it makes a little bit of money, it can be a small amount. I honestly don't care. But when I say money, I do account for maintenance and property management. So the
money you return you're making is after accounting for those things.
Yeah. So, but if I make $1,000 like after all maintenance and everything for a year, and I've got $0 in it, I'm very happy. Yeah, it's infinite. Yeah. It's an infinite. The $1,000 is not exciting because it's like, but it's an infinite cash on cash return, and that asset, because I refinance at 75% LTV, there's equity in it. There's already equity, and it's paying down. I could sell it. A BRRRR is really just like, it's the same as a flip, except you just don't flip it. Like if you fix it up and you sell it, you're gonna get that 25% equity as money, and you're gonna pay capital gains. Yeah. Then with a BRRRR, you just keep it. But you can't take that 25% out. You basically get your money back, and you sit on it. Yeah. I can sell it any day I want. After a year, it's gonna be long-term capital gains tax. My personal thing is I don't really want to sell them. If I get 30-year fixed debt, my intention is to keep them for 30 years. Yeah. I mean, I'm not never say never, and I'll probably sell some, but the property gets more valuable over time because, again, that debt's locked in. The inflation's going up, it's amortizing. So, in 10 years, you're making the same payment. So it feels like less because the money's worth less. So it feels like less, but then a bigger proportion is going to principal pay down. And in 20 years, okay, now you're really feeling like a low payment, and it's really paying down debt. And those last years, every payment is basically principal pay down. So for me, it's long-term wealth, but it needs me to make money in other way. Like you're not living with that rental. You got to let that cook.
So I have a ton of questions, so I don't want to keep jumping in if you have something. I love the concept. I like breaking things down into numbers. So if you're okay with making $1,000 a year per property and you want to make $100,000 a year, the math is very simple. You need 100 properties. Exactly. I mean, and if you're not using any of your own money, and you can do that over a 5-year period of time, and you can eventually live off of that if you know what you need to make your ends meet. I think the concept, that's cool.
Vacation money.
Yeah, I mean it's great. And then so from your wholesale business standpoint, I think of people who get into the wholesale business and they will just start cold calling, finding distressed properties, and they don't spend time networking with buyers to know what the buyers want. So how important is it for your company, Home Buyer Louisiana, that you are networking with buyers to know what buyers want before you go out in the market and start looking for properties?
Very, very important. I mean, you need to know that you can move the deal, because otherwise, like, how are you going to, an advantage I have over wholesalers is I do buy properties and I do have cash. So, because it is hard, like, if you're saying you're a cash buyer and you don't have actual buyers and you don't have actual cash, I mean, you're lying. Yeah. Right?
But there's a few of those out there.
There are for sure. So
we hear them, we see them.
So if you don't have the cash, make sure you have the buyers. Make sure you know that you can move a deal.
So for your business now, are you looking at properties as initially as a buyer and saying, okay, well, maybe this isn't right for me, but I've already networked with the other buyers and I know this might be best for this person?
Yeah, so we're always marketing, and it's here's the thing: it's hard to like if you're good at sales and marketing, I think you should, and you want to be in property, you should wholesale. If you don't want to do it, if you're more like, hey, I'm a rehabber and I don't want to do that, then just buy off wholesalers, buy off realtors. Like don't bother. But if you're good at it, you want to market, and if you're marketing for deals for yourself, you really should learn to wholesale because it's inefficient. If you're getting all these leads and you only have a certain criteria, or you've got too many projects right now, if you can't monetize your marketing spend, it's hard to keep spending. So I think you do need to wholesale. So we're always marketing, we're analyzing deals, and it's like that one will fit for me, that one won't, but I have buyers for it. You definitely need those buyers. I look at wholesaling as a two-sided marketplace. Like my background, that and this is where the cross in industries, because my business was connecting homeowners. We really got into the tradie side was bigger than the natural side. So really we're about connecting homeowners with contractors, painters, builders, architects, etc. So our job was to make it really easy for the homeowner to connect with these people, and our job is to make it really easy for these contractors to get work. So that's a job of a marketplace. Amazon's a marketplace. Uber's in a marketplace. Uber doesn't own cars. They don't have drivers. They don't. Their job is to make that connection. So that's what we did in my business in Australia. And I see wholesaling as the same thing. You're trying to remove friction for sellers to make it really easy to sell a property that's in disrepair or needs to sell fast. Your job is for the buyers to make it really easy to get deals for the next project. So both are important, but in a two-sided marketplace, the balance is always interesting because it's never fully in balance, and at certain times, certain sides are more important. So in 2020, 21, and summer 22, the buyers weren't as important, right? Because there was such an appetite, demand for properties, and there wasn't enough out there that like you could pretty much move any deal. And I think a lot of wholesalers neglected buyers during that period. I was always pretty conscious of still building the buyers, and I think now the buyers are more important because the buyers are there's less of them out there. So the truth is you need to have both, but if you don't have the buyers, then it's hard to wholesale. My best advice to wholesalers starting out though is to joint venture for your first few deals, because it's hard to build both because you need the sellers and the buyers. Yeah. But it's hard to really get the buyers on your side if you haven't done any deals. Unfortunately, you hear a lot of well-intentioned wholesalers, I'm going to bring all these deals, and they'll speak to a buyer, but mostly it doesn't come to fruition. So the buyers won't give you a lot of time if you haven't done any deals. So it's hard to get the buyers. If you get the sellers, they'll be more interested. But if you get the sellers before you know what the buyers want, can you deliver for those sellers? So my advice is for your first couple deals, is to joint venture with a wholesaler who has buyers. If they're willing to tell you, like, that's a deal. If you get this price, we can move it to our buyers. So therefore, you can get a deal with confidence, get the deal moved, build your confidence. You're delivering for your seller, and then now, if you do that a couple times, then now the buyers you're gonna smell different to the buyers. You've closed some deals. And now they're gonna want to be on your buyers list. You're gonna be able to build relationships with you. So I think that's probably my best advice. It's just hard. Two-sided marketplace. You don't know where to start. It's chicken and egg. So that's the best advice I would give. I did something similar, but I didn't. When I first started, I had a buyer who was helping me, right? And it took me a little bit to learn that I said no to a lot of good deals because he had one specific criteria, and he was actually a little bit conservative in his underwriting. So it's like I lost a lot of deals. So I think, but at least he gave me confidence and helped me like analyze deals. Yeah. And I sold my first deal to him. Haven't sold one since. But I think that the thing I did wrong, if that was a wholesaler, I would have moved a bunch of deals before that, because they would have said, yeah, that deal I can move to this person, and because everyone's different. Yeah.
So you're again, sales and marketing. You were calling sellers, and you were fine with that part of it. You had to network around with buyers to be able to find more people that you could be selling those deals to.
Exactly.
Makes a lot of sense. So let's talk about, before we hop off, let's transition to you and your family. And so I think from our standpoint, it's important for us to do business with people that we align with from a value standpoint, and we're big on family. If you're here most of the time you'll see a kid running around, and we'll have Santa here for our Christmas party, and there'll be a bunch of kids taking pictures. So family is important to us. So what is the goal for you and your family making the transition to the United States?
So I mean, our goal. Our goal is to live abundantly and spend time with each other. That's sort of like just our general goal. Like, and abundance is just by like being able to do what we want. That's really our overarching goal. It's not materialistic. It's not abundant. We're actually not very materialistic, but just abundance in time and with each other. So that's really our goal. I'm here in America on an E2 visa because I'm meant to make an economic impact to the area, and I take that seriously. We employ Americans. My first employee, she's been with me like coming on 5 years now. She's been the whole time. And so I think that's important. I see that impact too in property is a good way because we're dealing with these like dilapidated properties, that have been sitting vacant. So seeing them come and revitalize an area. I've sort of taken that, and it's actually helped me in business. So I want to give, and I'm a go giver. If you read the Go Giver book, so like when I came here, I knew no one. So I'm just like, and when I started, I met some tech entrepreneurs, and like what's a tech scene like? Like, can I help you? Like what are you working on?
How do I add value?
Yeah. What are you working on? Can I do you want some advice? Because I was just bored looking for stuff to do, and then I started meeting the property people, and I'm like what do you do? Like what can I help you with? And I think just being helpful really helped me because now I have a really big network. It's surprising the network I have given I'm not from here, and it's just because I was just trying to help, because I was trying to make an impact. It's not transactional. I'm not like, hey, I'll help you if you do X. I'm just like, I'll just help you. But when I help you, the universe pays you back. Things start coming around.
Amen.
And that brand of that, just people know you as being helpful. So just they'll say good things about you. You'll get word of mouth and
get a reputation. Yeah.
Exactly.
Truly live in your values.
Yeah.
Exactly.
Adding as much value to the world is the key to being successful, because if you continue to add value, it's going to come back to you. There's just no doubt. I mean, we've seen it.
Constant focus.
Yeah, and I think and people who have that mentality, you feel the genuine nature of their personality, and it's easy for you to align with people like that.
And I just have for me, it's funny because you attract what you are. So I just like. I don't really have many people that are scarcity mindset. So I even forget it because I understand that I understand the feeling. You can feel like I need to be protective and I won't share things, and so I get it. I understand why you think that, but if you don't act like that and you start to just give, you realize it's way better. Yeah. So, and I'm lucky that because I live like that, and I guess starting in New Orleans again, I just build a network of people that are similar. So pretty much everyone I know is abundant, go giver, positive, mentality. Yeah. I take it for granted that some people are 100%. Scarcity mindset.
100%. And it's
not our people.
Yeah. Yeah. And more it's good. You start attracting people who think like you. And I always say the purpose of business is to do business with people that you enjoy doing business with. Yeah. It's not to, do business with every single person in the world. It's just not everybody's your cup of tea. Making sure that you have the same mentality and values is critical. And I think people can be short-term greedy. I'm they're trying to make the maximum buck on this deal, and it's just be long-term greedy. Just if you do the right thing, it's not about that one deal. Just look after the person, do the right thing, and you'll do lots of business with that person. I've done a lot of repeat business with people. So I've done some deals. I closed a wholesale deal where I made $0. Yeah. I made $0. But I don't care. I didn't complain. My seller was happy, my buyer was happy. We did a deal, and then just the more deals you do, and I've done more business with those people, and 100%. So but some people they're going to get in the way of I know I've got to just do good business, and the universe will pay you back. Yeah. So what's the goal for your home buyer business in Louisiana? Just help more people. Our philosophy is that everyone smiles at the closing table. So we just every closing we have a photo. So we also got all these photos of people always smiling. So just we just want to fill up our wall with happy, smiling people at the closing table. We want to grow our transactions. I'm not looking to grow the business super big. I had 300 staff in my last business. I don't want to do that. I don't.
It's a lot.
I actually, when I first started, I was thinking that because I was looking at these national wholesalers. I'm I could do that. I had 90 people as salespeople that worked for me. I built the whole sales structure. I can do that. And at first I thought maybe I should do that, but then I realized I don't really want to.
Yeah.
I don't really want to, so I'm pretty happy to be Louisiana, like, local. I really want to be deep in Louisiana. I'm not trying to be this national wholesaler doing all these deals, but I want to be deep in our area, like know all the people and just do good deals, and we're just looking to grow that and continue that and build the portfolio at the same time.
There's so much opportunity in Louisiana. I mean, that's our business is to be as deep as we can in the markets that we want to be in. And so I get that 100%. It's easier to reinvest in the market you're in and add value to the community as much as you can than to try to continually reinvent the wheel in each new market. It's dynamics and people and relationships and things like that. And there's just so much opportunity around here. I mean, between New Orleans, Slidell, Covington, Hammond, even to Baton Rouge, anything, I always say east of the Mississippi River to South Mississippi, there's so much opportunity right here. And so
absolutely.
if you just continue to reinvest in the community, the people here support local. And if you show that value to the community, they're going to support you back. So I think it's a great idea. And the last question before we hop off, what legacy do you and your family want to leave when you're done with this next chapter of your life, or just in general? It's a heady question.
I just like, our legacy is we just want to like leave the world in a better place. Like, we want, I guess, to be remembered as like people that made an impact, remembered by the stories, the, acts of kindness, or, I think the legacy is just like a fond memory, there's like, yes, like I want to leave assets to my kids and stuff, but that's not the legacy, I also don't want to spoil them. Like the legacy, I think, is just being good humans, having affected lots of people around us, and that's a legacy. And would want my kids and my kids' kids to, also be free and like learn to. I don't want to just have assets. I want them to like be able to build assets, build relationships, and build businesses for themselves.
Yeah, that's cool.
Be good humans, make impact.
Yeah,
that's it. That's
Simple.
it.
And pass it on to the next generation so that they can make the same impact and continue that on. That's great. So, I mean, I think you're on a good track and you're doing a good job. I appreciate you coming on and talking with Lauren and I. I think people are going to find a ton of value in this, from business owners that are thinking about growing and scaling a business, transitioning to a new business, or anybody who wants to get into real estate. I think you gave a lot of good advice. So I appreciate you coming on.
Awesome. I really appreciate you guys. You do great work, and so I'm glad to be here. I appreciate it.
Thanks, man.